All right. Hello, everybody. Good morning. Good morning. How's everyone doing today? Hopefully, you can hear me. As usual, everything should be working. Miles, Johnny, all right. Excellent. Hi, Charles. Good to see you this morning. All right. The market's about to open here. About 35 seconds. And this Dowie mini chart is the one that we need to be paying attention to right when the market opens. It's already in a trade, so we'll have to let that conclude and then wait for a fresh setup. So keep an eye on that. Just quickly, let's see what crude oil did. 9 a.m. start time. A lot of action here. Getting into a small little trade here, which quickly lost 17 ticks, but then jumped into a winner. Well, more like a small winner, 10 ticks. But then the third trade of the morning right here made it happen. So that one took 3 trades, but it got it finished, and then a fourth trade even. So 2 nice trades at the end there. So crude oil starting off a little rocky with that first losing trade, but then nothing but winners. So crude oil getting it done. And unfortunately, the YM starting just a little bit too soon, 1 minute early. The nice trade here. We'll wait for the next setup. Market selling off. Dow is off 500 points, 1.4% roughly. The long trade happening very quick. That's long at 33,671, but maybe two. Boy, you had a really few seconds to grab it there. Not much. We're in a fast market condition, guys, so be careful. Good morning, Dan. There's another short. Heads up. Markets are treacherous. 33,689 is the short. Targeting 659 and 642. And the stop is at 731. But again, markets, fast market conditions right now. So be careful. And that green trade, if you were on your toes, it was tradable and it did hit its goal. So really that green trade should have finished with power of quitting. We're looking at this short here. It's still going if anyone's in that, but you can see dangerous markets, and it did just stop out. So that green trade was definitely the one. And very fast, but that was tradable. Enough time to execute barely. Yeah, you were quick. Probably had about 10 seconds maybe. Place that trade. Not much time. Can't make any mistakes. There's a long now. Let me know if you're trading this. That's at 751. It's targeting 784 and 802. The stop is at 712. Very dangerous this morning to start with the big sell-off. Let's just keep an eye on this for a second here. That orange line is where money management is for a break even. Now you got a short at 27. It did just trigger in. So stopping and reversing. Yeah, very dangerous, guys. Let me know if you're in the YM, but you could see how fast this market's moving. So it did just miss money management by 1 tick. Yeah. We're going to lean on that one finishing with that green trade. Seems like forever since I've been in here. It's only been a week. Unleaded gas this morning hitting its target, minimum profit target on the very first trade. Good for 30 points. There was a second trade also hitting all 4 targets. So unleaded gas doing its job. Finishing. So crude oil and unleaded gas were able to get it done. Again, the YM, you can just see right now in fast market conditions, but the first trade of the morning with fast, precise execution hit its goals, and then it got really rough, as you noticed. Looking at Catapult with the NQ, with the momentum bar starting right at waiting 4 minutes, 8:34, and maybe too fast. Lots of trades in here. There it is right at 8:34, and literally in 1 second, 2 seconds, 3 seconds. So that's what fast market conditions look like. We can just kind of pay attention, I guess, with the weekend, all the events that occurred over the weekend. The markets are now digesting. But you can see how fast this is going here. This is also treacherous. Good morning to you, Jasmine. So let me just welcome everybody again. Please feel free to hit the like button. I really appreciate that. Tomorrow is the Catapult Russell Boot Camp. Really excited about that. Still time to get in on that. If anyone's interested. John, yeah, you're better off standing down. I mean, sometimes it's better to sit on your hands. The decision to not take a trade is a trade decision. And oftentimes that could be the best decision. When you take trades, you want to be in control of your trade at all times. If you cannot be in control of your trade, that should be a warning sign to stand clear. I have so many charts here. I need to clean this up some. It's a counterpunch trader chart looking at the Russell just to kind of see how it might have done. And really the first trade came right here at 8:32, 2 minutes after opening. And enough time to grab it. Sometimes you got to have a backup plan and a slower chart perhaps. 8:32 and 13 seconds. There you are at 33. Like 20 seconds later, you're still hovering around the entry here. And it just missed its target too, like by a tick or two. So profitable trade, partial profit. Would have been targeting 58.8, and it got as low as, as high as 58. Let me double check that. Yeah, targeting 58.8, got as high as 58.2. So it did miss by 6 ticks, but still a partial profit. It's a slower chart, as you can see. John also reminding me that we will not have a trade room tomorrow. That is true. And the reason for that is the Catapult Russell Boot Camp. The markets are still moving fast. Look at the YM in the upper right-hand corner. If anybody has anybody been watching Bitcoin? Because Bitcoin has really dropped. Maybe a buying opportunity will be presenting itself. We were looking at Bitcoin using Counterpunch Trader last week, just to try to give us an idea of what might be happening. And I pointed out how it's been living on the 200 moving average, but Counterpunch had these short trades, and you could see how each one of these, kind of a warning to hold off on buying. I mean, if you could short Bitcoin, great. The CME now has a micro Bitcoin contract, futures contract. But look at the short trade again from last week, banging down to a target. And you got the 50 moving average joining with the 200. And look at the 200 starting to curl down as well. So definitely got downward momentum. And a buying opportunity will be presenting itself at some point. So it looks like, to me, it could go quite a bit lower, but you could always start cost averaging in if you want to start buying a little bit here and a little bit there to lower your cost basis. I guess it just depends on your outlook, but for long term, if you believe in crypto and Bitcoin, chances to buy it at lower prices may be imminent. Something to, again, you can cost average that in a self-directed IRA, for example. So it's good to use the futures contract as a proxy. And with Counterpunch being as accurate as Counterpunch is, and the ability to almost act as a crystal ball, all these strategies do really, but Counterpunch does such a great job on these daily charts. It's something to be mindful of. And there's an Ethereum contract now also on the CME, and I believe there's a micro Ethereum, although I don't think volume has found its way to it yet. But again, as a proxy, just to kind of get a sense of what's happening. There's definitely some big picture changes happening in the world. Uso Oil, this is another one. Inflation definitely showing itself in oil prices. I talked to you about this trade I was in the April, I guess it was either the 53 or the 52 call. I forgot. I already hit my targets, but now look at the trailer is actually exceeding target 3. And there's a good chance this is going to go higher. No fun at the pump, but great opportunity to make money as traders. USO, it's a good one. Get some good options on that. And quick look at the sell-off here with the SPY. Again, it looked really toppy in here. I don't know if you guys remember, but I pointed out a possible head and shoulders back in here. If you were on the Trade Hacking Club on Discord, I pointed this out with the left shoulder, the head, the right shoulder, looking really toppy. But then it came up and broke to a new head. Boy, I wouldn't want to have been a buyer up in here. I realized that Counterpunch was giving some trades, short, long, short, long. When the market is toppy or bottomy, that's not the time to be trading because obviously the top is forming. So you have to rely on some other technical indicators and patterns and just knowledge of trading in general. The strategy can't think things through. It's just looking for exhaustion, balance of power, price action. So anyway, looking like a new head is formed. And what appeared to be the head of the past was nothing more than a fake. So now you got a left shoulder. Is it here? Is it here? It's a bizarre looking head and shoulders, but it came up to make a right shoulder and then broke the neckline, and look at it go. And remember, the fake breakout, breaking out of resistance to form a new high, make a new high, and failing to follow through. What do I always say about that? It often leads to a strong move in the opposite direction. And finally, the counterpunch setup was able to catch the right shoulder and the move down. And look out below. Who knows how far it's going, but that's a gap down. And you could expect that the market's going to come back up and test that 200 moving average. But look at the 50 moving average starting to dive down. The curling of the 200 support becomes resistance. So this should come up and test from below at some point, fill that gap, and then maybe we'll see another leg down. It's hard to say. Unless it just finds rock solid support and starts rallying again, there's no way to know. But we could maybe get some information off the weekly chart to double check and see what that's telling us. But it's time to be cautious, everybody. There could be buying opportunities on the way. So I got all these arrows here from the daily chart. Get rid of them. So what's happening on the weekly chart is interesting. We could have the makings of a head and shoulders, but we need a right shoulder, right? We got our left shoulder. We got our head. So we could expect some sort of pullback and then maybe the failure to make a new high. And then if that happens, watch out below, because here's the 200 moving average way down here. And we're just now testing the 50. And when I say 200 day, I mean 200 week. This is the 50-week moving average. Gapping through the short trade setup. Of course, this is not optimized for the weekly chart, the counterpunch. I just copy and pasted the daily chart or changed the symbol. But there's a lot of information here. Let's see if it's going to find support on the 50 moving average or if that support's going to break. It's starting to break. You can see it pushing through starting today. We'll see where that closes at the end of the week. But the longer term trend is down. Remember, this histogram shows you what's happening on a fast trend on a chart 5 times higher. So that's the fast trend on a chart that where every bar would be 5 weeks. And you could see the high that it put in back here in May, but the new high made this month, or right at the end of the December last year, and a lower high, and it's moving lower. So divergence there with the bigger picture, higher time frame. Good morning to you, Pamela. John with great SPY daily short. Yeah, that was quite the setup. Took a couple false starts there and the fake breakout to get to that new head. I warned of that head and shoulders, but it was a fake head and shoulders, and then the new one set up. Like I thought this was looking like the head right in here, but then it made a new head, and then capitulation. And here's the thing: if the first head doesn't become a real head, and then there's a second head, watch out below, because you get that fake breakout with no follow through. Anyone buying up here, feel bad for them, because those are the last buyers in the world. Imagine that. You don't want to be that person. You want to be selling to that person. Counterpunch gave that trade pretty early there, hitting all its targets. So we could look at the other indexes. Let's see. Do I have a QQQ here? I think I do. Maybe I don't. There it is. Similar looking chart, but in this chart, the actual head, I believe that's right around the same time. Let's see, that's close to Thanksgiving. What was that first one on the SPY? Yeah, same date, close to Thanksgiving. So if you look back, I don't know if it's even on the Discord channel, but I was talking about this back then and warning about it. So on the SPY, it came up and made new highs and put in a new head, but not on the Qs. On the Qs, it tried to come up more than once, but instead of a new head, it put in a new right shoulder. Right? So here's your left shoulder, here's your head. What seemed to be a right shoulder replaced by a new right shoulder, and then that happened. So it was unable to make a new head and make new highs, even though the SPY did, the Qs couldn't. And it's interesting to look at the other two indices, the main ones, the DIA and the IWF, just to see what we can learn from those. Well, you can see here the sell-off on the DIA, counterpunch calling these trades. It actually got this breakout right also. But let's see if we could find any pattern, like a head and shoulders type of pattern here. So here we are putting in a left shoulder. And then on the 22nd, which was when the others were putting in a possible head, the Qs put in a head, the Spider put in a fake head, the DIA was way down here. This is the Dow Jones Industrials. And it didn't really put a head in until after the new year. So a little slower, but what do you see here again when it puts in that head? A breakout to new highs and the failure to follow through, which could often lead to a strong move in the opposite direction. And it had the SPY and the Qs corroborating. Is that your right shoulder? It's not the cleanest looking head and shoulders pattern. Definitely took quite a bit of time to form. Probably would see it a lot cleaner on a weekly chart, but definitely breaking the neckline here. Interesting. Get a lot of big picture forest from the trees information. Yeah, on a weekly chart, no real clear right shoulder. You got a 1, 2, 3 top. 1, 2, 3 being the head. So could it come up and test again? Or is it like, look out below? Look how far down that 200 moving average is. And then again, look at the high trend from 5 times higher. Putting in new highs literally back in May and June of last year, and it's been nothing but down. So as the price continues to make new highs, and see the chop zone, it's because it's toppy. Toppy is pretty choppy, and it looks like it could cross over the zero line and get red on this histogram here. Definite divergence as it makes new highs, and the high trend from a chart 5 times higher making much lower highs. Lots of technicals indicating down, right? So just to finish this discussion, here's the Russell. We'll start with the weekly and then go to the daily. So I don't know if this would be a left shoulder, head, right shoulder. But if it is, you got a neckline being broken here in the short trade. Oops. Sorry, I'm mousing left-handed, so I'm a little klutzy. This isn't optimized for this chart, as you know, I'm just copy pasting, but you can see that a short setup. And that's the first green trade. The white trade would have been here. I don't have the white trades turned on because I copied the Qs, and the Qs are only showing the green trade. But I know Counterpunch well enough to be able to show you that this was a white trade right here. And the stop held, and it's already hit targets 1 and 2 on its way to targets 3. And then you got a 4 and a 5. And then the first green trade following a white trade, when the exhaustion dots are close and level to the prior set, we know from years of experience that that's a very high percentage trade, and those trades typically win. And you got its target 2 down by the 200 moving average, and it already broke major support through the 50 moving average and the neckline. So a pullback, again, that's only a 2-tick entry. Maybe it needs more like a $2 entry, but a pullback to maybe 264, just somewhere in this gap, somewhere in here, could be a good chance to get some put options on the IWF for a weekly. That's the weekly chart. So that would be a longer position hold. Let's just make sure and look at the daily chart. I mean, it's looking more and more like a head and shoulders, really. The head being here, the highest point, Again, ahead is always a breakout to a new high and then a failure to follow through. And a pretty solid retest. Whoops. I got my snapper on. So a pretty solid retest of the head here on this right shoulder, but definitely making a lower high than the head. So that's a pretty clear head and shoulders on the daily chart. And you could already see that that short trade triggering in has hit target 1 and on its way to target 2 just last week. So, and you can see the curling over of the 200 and the 50 starting to dive down, and watch out below. Who knows how far this market is going to go, but this is all looking like some sort of a crash of sorts or correction, pretty strong correction. No one knows for sure. Maybe a lot has to do with the threat of Russia invading Ukraine, amongst other things. These are buying opportunities. Start cost averaging in some investments, not just trades. You could trade, obviously, we could trade down, but if you're looking to pick up things at a discount for a retirement account, I don't know if the selling's done. Doesn't look like it is. Looks like it's just starting. But that's where cost averaging is a good idea, because you never know. It could turn on a dime and rock it up really fast, and we've seen that a lot over the last several years, where you had like 1 or 2 days chance to buy, and then the markets, all the bargain shoppers come in, and it gets onto a wicked buying spree and sends the markets to all new highs. And that could easily happen again, just because the pattern is showing weakness and the setups are showing lower prices. It doesn't mean that's going to happen. And that's where cost averaging might be a good idea, because if it does rocket to new heights again, we saw that after the COVID crash, where it just went on the most wicked bull market in history. I mean, we're still in a long-term uptrend. So in the end, the trend is your friend. Is it breaking? It looks like it could be. But without knowing for sure, picking up some blue chips, cost averaging your way in, maybe isn't a bad strategy. It looks to me like it's going lower. All the indices are weak. But what the institutions do, what happens? As soon as some diplomatic thing occurs, as soon as some headline crosses the news wire and everyone thinks the world's okay again, boom, rally time. So I like the idea of cost averaging a little bit. Trades are happening on the short side, on the longer term swing trade side of things with the indices. Inflation is a threat, so commodities up. Our friend Romulus, if you saw on the Trade Hacking Club, predicted a price on corn. Just hit that price. Inflation is definitely a real thing. So not everything's going down, in other words. Anyone have any questions? A lot of people joining us over this last 15 or 20 minutes. So good morning again, everybody. I know this is typically a day trade room. We've been talking about these swing trades. There is a 10 a.m. crude oil. The short trade came too soon. So the mini session on crude still looking for its first trade this morning at the 10 a.m. mini session with Spotlight Master Suite. That's what we've been looking at mostly, and some counterpunch. Haven't really looked at a lot of catapult. The market has been so fast. If you have any questions, don't hesitate to ask. Definitely got some good winners on the Forex side of things. Haven't looked at Forex much in here, but on the swing trade side, our Spotlight FX alert service posting some strong gains. The Euro Yen pushing on its target 2 on a current trade. Japanese yen and the 4-hour chart. That chart is a counterpunch trader chart, and it's been winning a lot, like 80 something percent for 16 years. I always monitor it and keep an eye on it. Got the automation running just so you can kind of see it. So this is dating back to over 10 years. Nope, it's only 1 year back. I have to reset the date on it. I guess it's just pulling too much data, but you could see it's still maintaining. I mean, it was winning in this level prior to last year, so it still is, I guess is the point. Currently in this trade here. And pushing on its target 2. John asking if I got many new students from Well 365. Yeah, a lot of people jumping on board Counterpunch Express from Well 365. That was a fun event. So you can see on the daily chart here, pound yen has been really amazing, hitting its target 1 today. Euro yen. Counterpunch Trader is just so versatile. The yen, obviously the yen pair is doing great. Aussie yen. The Aussie yen tends to follow the U.S. stock market, so that's interesting. Or the market, or the U.S. stock market follows the Aussie yen. It depends, but there's some interesting correlation between this Forex pair and the U.S. stocks. Anyway, a lot going on. Exciting times we live in. It's always a challenge. And I was not following the crude oil day trade, but there we are. First trade of the 10 a.m. session. It was a small little trade. 8 ticks to target 1 is too small. You'd have to go to target 2. Definitely hit money management. Target 2 was at 69, and it hit 68. It missed by 1 tick. So, you miss a target by 1 tick, that counts towards power of quitting, even though it's a small little trade. Our philosophy is always take what the market wants to give us, not what we want from the market. We end up getting what we want from the market with patience and time as our trade plan works its magic day in and day out. Power of quitting empowers you to stop trading when you hit your goals. And although today wasn't much to speak of, it was still successful, missing a highly tuned target, missing by 1 tick, and that counts towards the power of quitting. And this session is one and done, even though it probably ended up breaking even. It's too small to really mess with trying to scalp out anything except maybe a cheese sandwich. But regardless, missing a really nice short trade, it just happened too early. That's the way it goes sometimes. Rather break even than trade 2 or 3 more trades and lose when the trade plan says stop, stop, stop. John, yeah, sometime later this afternoon, the Catapult Russell indicators will be released. I still got some work to do on the member site, and that's what I plan on doing. Shortly after the session, I'm going to be working on finishing touches and stuff like that. It's not too late to get in on the Catapult Russell Boot Camp tomorrow. If you're interested, let me know. It's definitely happening. Working on a couple things here. That's not what I'm looking for. Okay. Cloud, yeah, there's the Catapult E-Mini member site, which is the one you're referring to. It has the ES, the YM, and the NQ. Yes, that's where it will be. So this is the time of the morning where asking questions is a good idea because, as you know, we've been in fast market conditions. Trading's been kind of rough. It has kind of slowed down and has become a little more orderly. But trade plan times who has a trade plan time starting at 10 a.m. with the indexes? That's an important question. If you're going to continue trading, don't deviate from your trade plan. It's the proven trade plan that makes you money over time. It's not the random trade that you take John Wayne style, shooting from your hip, unless you have some sort of a pattern. If you're able to take trades based on other things that you know and feel comfortable with that are outside of a trade plan, some discretionary trading, that's definitely on a higher level of knowledge and expertise. It's kind of beyond the scope of this trade room. So I don't really get into that in here. I try to stick to the strategies, the trade plans, and keep the sessions short as an example of just the backpack trader philosophy. Get in, get out, get done, and move on to the rest of your day. And I'm about to do that. So this is your chance to ask any questions before I let you guys go. Don't forget, tomorrow the trade room will be closed. I will be back in here on Wednesday. And John will be here on Thursday, I believe. John, correct me if I'm wrong. I forget. All right. Well, I don't hear anybody. Since you're looking at some dailies, what does silver and gold look like on Counterpunch? All right. Good question. Let's take a look. There are two ETFs that I think are worth looking at, and Counterpunch has done very well over the years with those. What I should do is close. I think I'll borrow some of these other charts. This is the, I like to look at this as kind of a proxy too. This is like a travel type chart. This is the airline ETF called JETS. Airlines in a world of hurt right now. Let's go ahead and look at gold. GLD is a good ETF for gold. I'm not a big gold trader. I'm not crazy about this chart. It's just really erratic. We could look at a weekly maybe and get some insight, but I'm just the gold is, I don't have a feel for it. I don't think anybody does. Maybe the gold miners is a better one to look at, but you could see that it peaked out last July and it's been doing nothing but moving sideways, vacillating around its weekly 50 moving average ever since. And it's now in a long-term choppy, see the chop filter down here. It's amazing what these indicators show you. Definitely nothing I'd be interested in personally. Silver, probably the same thing. SLV. You know, Counterpunch has done very well with these charts. So this is a weekly chart. I don't know if this is head and shoulders here, but it's just nothing I'm interested in. I don't see anything in here I want to be a part of. Good look at the daily. Yeah, I mean, lots of volume. That's 10 million shares already. And you're seeing some winners. So with Counterpunch Trader, SLV, let's just look at this. It's not an attractive looking chart, but it's a winning chart, different from GLD. So for example, this trade here, it gapped through the entry, but then pulled back to it and then zoomed up and hit all three targets. This short trade, couldn't get it because it gaps. See, when you have something that gaps a lot, that could be really good or really bad because you can get filled with extra profit or bigger losses. Small loss here. A nice winner, but no chance to catch the entry, although it got close to it. And again, this is not a tuned up chart. You know, I just copy pasted. But a really nice short right here. Really winner here. A winner here. Winner here. This one looks like it came from below and then up. You don't know if it entered and stopped out, then went up again. You'd have to drill down, but it appears that's a winner. I'm not looking at the add-on trades, just the trackable trades. Another winner. So, I mean, SLV, this is looking like, you know, if you could trade with the risk of gaps, it definitely wins a lot. I mean, we've hardly seen any losing trades at all over the last several, months. As far as the gold miners, GDX is usually a good one, has been in the past. And you could see a bunch of winners on this chart too, actually. So I would say with gold, I'd rather trade the gold miners ETF than the actual GLD gold ETF. It just wins a lot. Winner. This one actually triggered in here on this bar. There's some filters that brought the trade and had it print again. But there's a winner. There's a winner. There's a winner. You got some filtered out trades. We don't look at those. Here's another winner. Here's another winner. Lots of winners. This one here looks like it was a loser, but it stopped and reversed in profit. So that's interesting. Here's your first losing trade. A couple losers actually in a row here. So there's another loser, another loser. So there's like 4 or 5 losers in a row. And then a bunch of winners again, probably. Definitely a winner here. That stop barely holding. Again, these charts are not tuned, and you might put on trend mode and clean up some of those. Trend mode might prevent some of those losses. But anyway, that's the GDX, John. at SI. Well, yeah, but that's a futures contract, right? You're not going to swing trade a futures contract. I mean, day trading SI is super risky as it is because it's a very expensive contract. And to swing trade it on a futures contract is, talk about John Wayne. I wouldn't do it. Very risky. You go with SLV and you got options that you have controlled risk and you can get leverage like that. And it wins a lot. And a lot of times those gaps are going to be in your favor. We saw a lot of winners and hardly any losses over the last year or so, several months worth of trading. So that's my take on silver and gold. There are other things I like more, but as you can see, I know that SLV has done well with Counterpunch because years ago I tested it a lot and it did just as well then as we could see it doing now, today. So that's some long-term history. I did see another chart here that would be worth looking at. XLF, the financials, ETF, Spider Financials, definitely short. This one wins a lot too. You got 28 million shares already. Nice big winner in puts, nice big winner in calls. This is a losing trade. This was a winning trade. Again, I'm not looking at the add-ons, just the trackable trades. Lots of winners in this chart. This is a good chart. XLF. And you could look at XLE, the energies also. These are nice markets. They trade well. They're huge in volume. And at trading at, between $40 and $35, $40 a share, you're going to have some affordable options. Like you can buy multiple options so you can scale out at different targets if you have a trading account of any size, 10,000 on up. You can afford more than one option probably, depending on your risk parameters. All right, guys, hope that was useful. Buying opportunities, perhaps. If they're not here now, start cost averaging in some long-term investments. So we're talking trading looks like it's still down. Hope everyone has a wonderful day. Please hit the like button. Don't forget, tomorrow is the Catapult Russell Boot Camp. And I look forward to seeing as many of you there as possible. And I'll be back in here on Wednesday. Have a great day, everyone.